Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. As this market looks for direction, could it be headed for a little bit of a consolidation phase? Our panelists weigh in. Today we're joined by stock strategist Todd Bunton, ETF Research Director Nina Mishra, and market technician Kevin Matris. And I'm going to start the conversation with you. You actually say that a little consolidation could be good for the market because it feels like it does need a break here.
Yeah, I mean, the market has run up so fast, so far, and I think a lot of people are just afraid of the market right here. But what's interesting is that so many people are desperate for a correction. So many people are desperate for consolidation, because they have it in their mind. Once I see this level, that is when I'm going to start adding to stocks. But the market rarely gives you that warm and fuzzy feeling of comfortability. Now, we are in this tiny, tiny little consolidation right here, hardly a base, but we have kind of been stuck for the last, I don't know, about week and a half. But once we can break through there, assuming we do, I would not be surprised to see it make a beeline to 1565, because that would be the most uncomfortable thing for so many people who have been waiting for a better price.
So 1565 is the all-time high on the S&P.
Right. So consolidation, that would be wonderful, but I wouldn't be holding my breath to get it.
All right, so we are already in consolidation or not?
Well, we have been consolidating in this 15 area probably for like the last week and a half. So it's not really the big broad base that a lot of technicians are looking for, because if you are in a overbought state, you can correct an overbought condition either by seeing it go down, or you can reconcile that just through time. So price and time corrects overbought conditions. So we've only been in this area for a week and a half. It is consolidating, just not the broad base that people are looking forward to.
And last week we saw 1500 on the S&P as a support level. We did touch that a few times. Every time we did, stocks would rally intraday or the next day. So that's a good support level here. And until we break that, then I'm fairly bullish in the short term, too.
All right, so Nina, you say investors could be getting cautious here as the indexes reach multi-year highs. That's not necessarily a bad thing.
It's not a bad thing at all. I agree with Kevin. And once we get that base and we have a strong support over there, then we can go higher from there. So consolidation is going to be a good thing, and it will give many investors opportunity to buy at the buy levels.
You, Todd, feel that it's unlikely we're going to break above 1565 unless something goes on with earnings here.
Yeah, I need to see more fundamentals behind this market. I was kind of the bearish ones. At least I expected more of a flat market in 2013. I've been wrong, and I'm willing to admit that. But if you look at Q4 earnings season, it hasn't been that bad, but it hasn't been that good either. And if you look, earnings estimates are coming down for next year. It's just that the market doesn't care. So you're seeing PE multiples expand, but I get uncomfortable when I see that for a prolonged period of time. I can't see markets making new highs without the fundamentals behind it. And that's what gets me a little worried. But I still think the momentum can carry us to that level. But to break us above the all-time high on the S&P, I have to see something tangible in the form of higher earnings or better than expected GDP growth and higher expected earnings down the road. Exactly.
All right. Speaking of indicators, corporate stock buybacks have been on the decline for the past 6 weeks, according to research that's been published. So I asked the question off camera, do you find it troublesome at all? You don't think that it's an indicator, but you do say that historically buybacks, corporate buybacks, are an indicator of when a market is nearing a top. So is this market nearing a top?
Right. It's a contrarian indicator, if anything, so it might be a bullish signal or a bearish signal, like I was saying. Traditionally, corporations will buy back stock when their stock is high, and they won't buy it back when it's low. It's the exact opposite of what you want to do. They're buying high and not buying when it's low. So yeah, if anything, it's kind of a contrarian indicator here.
Okay. Go ahead.
I was going to say, I mean, yeah, management would prefer to buy their shares when they're low, but they normally screw it up. Historically speaking, though, there is not much of a lift that you will see with a stock once you see a repurchase program enacted. So they have provided very, very little meaningful price lifts to their stocks when they buy it. So since it's always been considered, at least in my research, since it's always been considered a poor predictor, the very fact that you're seeing share repurchases dry up doesn't bother me a bit. And in all reality, because I saw that article, they were saying that share repurchases have dried up in the last 6 weeks, which means probably management is thinking, oh my goodness, stock prices are too high, but we just saw the stock market rally 10%, so they've already gotten it wrong before, and I just think that the long history of management getting it wrong when it comes to repurchasing their shares is just going to continue probably for an eternity.
Nina, you say too early to draw a conclusion on it yet, but if it continues, for you, it's going to be a little bothersome.
Yeah.
How long will it have to continue?
And along with the decline in share buybacks, insider selling has been going up. So that bothers me. So if this trend continues for another month or so, then I think it is going to be a cause for worry because the companies know more about their valuation than we do.
Okay.
So I look for that trend going forward.
Okay.
Let me jump in though. I think insider buying is far more important than insider selling because insiders have a whole myriad of reasons why they may be selling their shares. I mean, they may have waited for years to be able to exercise options and get out. So there's so many reasons why an insider may sell, but there really is only a couple of reasons why somebody is going to buy, and that's because they think the shares are going to go up. So I'm not overly concerned with when insiders start selling shares.
Okay, good to know. Duly noted. We're sitting here on taping this on the 12th of February. State of the Union address this evening. Is the market going to derive any direction, do you think, from that address, Todd?
I don't think so, no. I think the focus right here is everybody sees that the market's near new highs. People are wanting to move in. You're seeing money move in to equity mutual funds for the first time in a long time. And despite what President Obama says tonight, I think that continues.
Anything from the other end of the table?
I'm very interested to see the tone that President Obama is going to take, because oftentimes you'll see the State of the Union address simply be a laundry list of policy initiatives. And everybody knows we have this big fight looming when it comes to debt and sequestration. So I'm interested to see what kind of tone he takes. Is he going to be reaching across the aisle, or is he going to be, drawing a line in the sand? So whatever tone he takes, that is going to, I believe, have at least some impact on the market. So I'm going to be watching just like everybody else.
Nina?
I think he'll touch upon economy, but I don't think it is going to move the market much.
No direction provider. All right, thank you all for that. And in our next segment, these folks were kind enough to share their top stock picks. So next click is yours.